Greetings everyone, Jake Bernstein. It's 6:58 a.m. in the Santa Cruz Mountains, California, Sunday, the 23rd of December. This is your trading lesson for the week. Thanks for being here. If someone said to me, of the 52 years that I've been in this business, what would be the one lesson I would want you to take away from me to improve your trading and your life? That lesson would be clearly, without a doubt, setup, trigger, follow through. I've spoken about this many times over the years. I want to re-emphasize it, say it once again. Number one, setup. Every trade needs a setup. A setup is a pattern. It could be an Elliott wave. It could be a Fibonacci retracement. It could be a cycle, seasonal trade, timing trigger, divergence, any of those things. Now, you need to begin with good setups. I don't believe that Fibonacci or Elliott wave are good setups. That's my personal preference. I believe that a seasonal is a good setup. I believe that very low small trader sentiment is a good setup. And you can see that, for example, right over here. This is a very long-term chart, a quarterly chart of S&P futures showing futures at the top of the screen, and in the bottom of the screen, hold on one moment please, the 3-period moving average of the daily sentiment index. The daily sentiment index is something that we do here. We've been gathering it since 1987. When the sentiment index is really low, meaning small trader is very bearish, we correlate to bottoms. When it's very high, we correlate or precede tops. So let me show you the pattern here. One moment please. Let me move this guy over, delete it, and put him back in again. Let's do this right, Jake. Right over here. And you notice that this very high bullish small trader sentiment preceded a top. This one, a bottom. This one, a top. This one, a bottom, and so forth. Every one of these, at the low or the high, constitutes a setup. It's a call to action. The second aspect is a trigger. Something must happen in the market itself to get us into that trade, because we don't want to, as they say, catch the falling knife. You don't want to try and grab it while it's coming down. You're much better off grabbing it on the way up. So you need a bounce, a trigger, a timing trigger, moving averages, divergence, channel, retracements, stochastics. Again, there are many of these triggers. A setup without a trigger is no better than a trigger without a setup. We don't trade on triggers, we trade on setups plus triggers. I have my favorite setups, I have my favorite triggers. Step number 3, follow through. Every trade must have follow through in the form of a stop, a target, and most of all, a profit maximizing strategy. And I realize I've spoken about this topic many times before, but it is no more important than it is now. It's never been as important as it is now. Because with the violent intraday swings we see in all markets, it's important to have a setup and a trigger, and most of all a follow through, because if you're not getting the big trades on the follow through, you're not going to make money. I realize that I'm preaching to the choir. I realize I've been redundant, but I want you to remember this. Make it part of your trading, make it part of your very being. Never take a trade that does not have each of these 3 elements. Remember that. Very important. Being redundant, that's my best advice to you. Happy holidays to everyone. If you have topics you'd like to see discussed in this training lesson, please let me know, and I'll be glad to oblige you, assuming that it's a reasonable topic to discuss. Thanks again.